The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Stock of the day is one of the biggest, BHP. It is out with its production update, reaffirming production and cost guidance after booking record copper and iron ore production over the past 9 months. Copper production coming in at 1.5 million tonnes, driven by a 20% increase at its Escondida operation in Chile and strong underlying performances across other operated copper assets. However, over the third quarter, iron ore production was 7% lower compared with the previous period. Nickel production down more than 70% from the previous quarter, and BHP was reported to be considering separating its iron ore and coal businesses, part of its energy transition strategy, and the mining giant say it's on track to cut greenhouse gas emissions by at least 30% by FY30. And despite reaffirming cost guidance, it has flagged higher costs for its steelmaking coal project due to weather and geotechnical issues. So let's, in fact, stock up just over 1% today, but has, I guess you look over the past 18 months, has been in a downtrend. Andrew, let's start with you then, what you're seeing with BHP. We often talk about on this show that you buy at 40, sell at 50. Look, we're below that level at the moment. How do you view it?
Yeah, look, I'm not a big fan of owning mining operations because I think they are far too inherently cyclical to give you the kind of stability that you want to generate long-term compounding returns. Having said that, if there is a miner that you want to own, it's BHP, with the fact that it clearly is not only the largest in the world, but right at the bottom of the cost curve, giving it a significant competitive advantage. Trading at a PE of 10 at the moment, it's sort of well within its long-run bottom quartile. And so for me, I'm going to put it a reluctant buy on the basis that I don't normally like to own miners, but it's hard to look at one this good at that kind of price
value. Look at that, $36.
Exactly.
Good value there.
Exactly.
Well, it's below that $40 level, isn't it?
It is.
So,
it is.
Okay, so a reluctant buy from you, Andrew, because you don't really want to get into resources, but if you had to, this would be it.
Absolutely.
Adam, so this is compelling for you then, is it?
Yeah, I mean, yeah, we were buying at 33s, 32s the other day. Happy to be accumulating this under that $40 mark because it is a good trading stock for that sort of $40 to $50, though we haven't seen $50 in a while. But I think Andrew's right. We're at the bottom of the cost curve on these things. They did say that output, there's going to be some extra costs that are going to happen. I thought it was fantastic that they came out and said that they're going to be net zero or close to net zero or 30% by 2030. Like, we don't hear many businesses talking like that. So I think these guys, you buy BHP for that long term. These guys are looking 20 years out. They've got a very structured approach to what's going on. Some of the other things that they didn't mention there, nickel output was down 88% year on year. So that's certainly an area that they've obviously got to keep working on. And nickel has been a tough one. We've seen mine closures and company closures on that. Coal output was down, but copper up 10% year on year. This is fantastic. Copper is one of those metals that is going to drive BHP. They've got one of their largest Escondida mines, one of the largest in the world at producing copper. And I think this is definitely going to be one of those metals that is for the future and going forward. If you talk to anybody in plumbing, I talked to a client yesterday and he was like, copper's gone through the roof. We're using aluminium now instead of copper because it's just too expensive.
Plastic
these days to do it. So so in other words, I think BHP's working on, they've had a couple of issues with their port and bottlenecking around that, getting that through. They're working on those issues. CapEx might be a little bit higher. Don't buy this for the dividend. The dividend is going to continue to get crunched as these numbers keep coming through. But it is at the bottom of the cycle, $36. I'm happy to throw a buy on it.
But should we be focused on, obviously, the slowdown we're seeing in the global economy? You talk about copper, that is the barometer for global growth. Yep. Plus, of course, what we're seeing in China and perhaps what's to come.
Yes, China definitely needs to continue to trade with Australia, right? That is definite. They're not going to be able to trade with the US, and they certainly need our iron ore. They certainly need our commodities. So I think China is going to be okay. However, yes, there will be a slowdown globally. I think the US dollar coming down is obviously very positive for commodities, and so that is helping things move on. Iron ore continues to hold around that $100 mark. I don't know how it keeps staying there, but it just keeps holding there at $100. BHP can make a ton of iron ore for around about $25 to $28 US, inclusive of dividend. There's still a large amount of profitability to have that, and they did third quarter output of 61 million tonnes. You can do the math. It's a lot of money.
Yeah, either way you look at it. All right, that's a double buy then for our stock of the day, BHP.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.